Well, joining me now to talk markets is Jeff Krumpelman. He's a chief investment strategist and head of equities at Mariner Wealth Advisors. Jeff, it's great to have you on the show today. And after what was a bit of a choppy start to the year in that first trading session, we're now looking at a second day of gains. How is this setting us up when it comes to equities?
Well, we have been ultra contrarian bullish over the last 2 years, and we've had a great kind of 2-year run. And I think our theme for this year, unlike the previous two, where I think we were set up very good, particularly in 23, coming out of the week 22. And then we thought last year data would continue to improve. This year, kind of the theme is clear air turbulence. I think that the fundamental backdrop looks outstanding. It looks very good. Strong economy, strong earnings, solid earnings, and good trends in whether you're talking about interest rates or inflation. They're stabilizing at solid levels in our view.
Mm-hmm.
And the turbulence is going to come from valuation and from what we see in the technical data so far.
Mm-hmm.
The market looked tired at the end of the year, and valuation's rich. It doesn't mean a meltdown.
Mm-hmm.
It just means that any news that's less than perfect on the policy front, on the earnings front, on the economic front, I think we're going to have, periods of, 10 to 15% pullbacks or corrective periods on our way to low double-digit returns. 6,600 is our target for the S&P. So we're set up fine, but strap in a little bit is what I'd say.
All right, Jeff, good to get your take there. Of course, we see stocks rising this morning, led by these technology names, on the back of record sales in the fourth quarter for Foxconn, the artificial intelligence space benefiting from that. And then a story in the Washington Post earlier that President-elect Donald Trump is reportedly considering lesser tariffs, more targeted tariffs versus huge tariffs as he promised along the campaign trail. How should our viewers digest that?
Yeah, we've tried, I think as you talk to many people, and I'm sure you've asked a lot of folks about their take on tariffs, and we agree with most that, a la Ted Lasso, be curious, not judgmental. There's so many unknowns. But I think your take, what you just said a few seconds ago, is probably correct. I think that, as in 2018, this is more about China. It's more about moving supply chain out of China and national security risks there, and targeted tariffs towards that country. And he can use also executive order to place tariffs on China. It's more difficult and will take acts of Congress to do it elsewhere. You can't make the national security argument on Europe and Canada and Mexico. And I don't think it's about those countries. So I think there'll be, instead of a potential nuclear meltdown, that some folks expect with regard to, inflation risks and tariffs, I think it's more just like, headwinds as you're riding your bicycle a little bit.
What do the technicals tell you right now, Jeff? We're talking a bit about the fundamentals, some of the risks that are out there, even as you do see the S&P 500 on a path ultimately to double-digit gains. But we didn't get that Santa Claus rally, and many market watchers do watch the first 5 trading days of January. So technically speaking, what can you tell us based on those inputs?
The percentage of stocks trading above their 50 and 200-day moving average went from 70% or so in those first 10 months of last year, and it looked like, there was risk on, to roughly 20% trading above those levels. So again, that would support being tired. The advanced decline line, the number of stocks advancing versus declining that had been in a nice uptrend, has plateaued and rolled over a little bit, but still in that uptrend. So it doesn't say we're, again, poised for some kind of bear market. It just says, hey, I want to pause a little bit. And also, I would add to that, we had broadened through the fall. It wasn't just about Mag 7. It had been about the other sectors. And we've seen a re-narrowing in December and early January. The Mag 7 actually have been a place to be, and they perform extremely well. We think it will continue to broaden through the year next year as we get relief on some of these concerns about policy risk. But it says the market's cautious, and there's some red red signals out there, or some yellow signals out there.
Jeff Krumpelman, Chief Investment Strategist and Head of Equities at Mariner Wealth Advisors. Jeff, thank you so much.